For the better part of the last 3 weeks, I have been viewing, reviewing, and advising on so many insurance policies. And today we're going to talk about some of the bad things and some of the good things that I found in these policies so that whether you take me up on my offer, whether you enter my contest or not, you'll still have the guidance to make sure that your own auto insurance policy is good. Good morning and happy Monday, everybody. It's your accident and injury guy right here in my soon-to-be new Elkton office. That's right, we are moving. There's going to be a big event and all this other cool stuff first weekend, I think the first Friday in June. So make sure that you connect with me, comment here or otherwise, and pay attention because there's going to be all sorts of fun stuff at the new building with us and a whole bunch of other people who are in the building doing a big ribbon cutting ceremony and everything early June. So be on the lookout for that. It's going to be a big whole bunch of thing with food and fun giveaways and all sorts of stuff. But today we're talking about auto insurance policies. Big surprise. I talk about auto insurance policies all the time because when all you do are auto accident and injury cases, you deal with a lot of auto insurance. So as you probably know, and maybe you're seeing this for the first time, this month I am doing a big push. Now, the service that I offer here for these free auto insurance reviews, this is something that I offer year round, 365 days a year. But this year, this April, we are doing a big push at marylandinsuраncebook.com. That's where you go. You're going to enter to win a contest at the same time that you send me your auto insurance policy to take a look at. And as many of you already know, and if not, you're finding out here now, I am not an insurance agent. So at the end of this review, you're just getting advice, not a sales pitch. You're not going to get a quote from me. You're not going to get upsold on, hey, you need this, that, or the other product, other than from an advisory standpoint. And we'll talk in this episode about some of the things that I have seen on policies that I have issued warnings about. For example, I have seen some incredible policies with substantial liability and underinsured, uninsured motorist coverage, like $250,000 per person, $500,000 per accident, which for anybody, and typically this kind of runs in line with my advice, anybody who owns a home, you should absolutely have that much coverage in an absolute minimum. Why? I want people to say, hey, if I were in an accident and I were injured and the other person is absolutely uninsured, why do I set this up as the scenario for you to imagine? Because I want you to be protected in a situation where the worst case scenario, your insurance policy is the only insurance policy that is available to pay out on a claim. Assume that you are hurt to the point where you are out of work for at least a year. What is that going to cost you? What are you going to need? And again, remember, there's going to be a bunch of medical bills that, depending on how you handle the claim, whether you're working with an office like ours or not, that helps guide you and maximize these benefits, a lot of that you may end up having to pay out of an eventual settlement. Make sure you have coverage that in the worst case scenario, you are comfortable with that amount of money, the maximum limit on that policy, potentially being the only amount of money that gets paid out in the claim. Is it enough? Is it enough to cover your mortgage for a year if you're out of work for a year? Is it enough to pay off what you have left on that mortgage? Because that might be something that's worth considering and looking into. And you will notice when you go to your insurance agent with the guidance that I've provided you after doing the free review, how incredibly inexpensive taking that $250,000 policy and bump it up to $500,000 or bump it up to $1 million in coverage. Is $1 million in coverage enough to pay off the mortgage on your house? Because you'll be surprised at how little the increase between $250,000 in coverage and $1 million in coverage is. It's going to be different for every insurance company. So I can't give you those numbers because I can't quote you, but I do know from experience, from talking to clients, from helping them navigate this, from working with my very own auto insurance policy. There was a period of time in which I thought, hey, I've got 100, 300 coverage, nothing can go wrong. And then I looked one time and saw, hey, it's really, really inexpensive, like $50 a year to go to 250, 500. And eventually I was like, it's even cheaper to go to $1 million in coverage. So be looking at those things. This is the type of guidance that I'm going to be providing in doing these reviews. So take a look at that, whether you have me do the review or not. And use this information to say, hey, is my insurance policy enough? Because it might not be, and you might be surprised. But what really surprises me, and this is a tricky thing that I have talked about in the past, is that I have seen insurance policies with $250,000, $500,000 worth of coverage on the liability and on the underinsured motorist coverage. And then there's a PIP waiver. That PIP coverage only benefits you. It only pays you and or your medical bills or your wages. It doesn't pay somebody else. It's only coming into play if you are injured and miss time from work, and it's relatively inexpensive. And the number of people who buy their policies online, this is where I see it the most. If you buy your policy online, it knows that you are likely to be looking for price. So taking away certain coverages, like waiving your PIP, but not telling you that you're waiving PIP, is one of the number one ways to shave a few dollars off of a policy. And these insurance companies assume that if I'm $5 in more cheap, less expensive than the next quote, they're going to shop with me. They're going to buy the cheaper policy. Don't buy the cheaper policy. Sometimes buying the cheaper policy might work out for you, but don't just look at the price. You need to look at the coverage. It's so important. Another thing that I've seen with a handful of policies, so the tricky PIP waivers are one of the ones. So if you look on your policy and you see something called passenger PIP or guest PIP or guest medical or passenger medical, these are on Progressive policies more often than not, it's a waiver. But they want to label it in a way that you look at it real quick and say, oh, I'm good. I have personal injury protection coverage, but you don't if it's guest coverage. Geico's policies, a lot of them say option A, and we've talked about option A in the past. Option A with a Maryland Geico insurance policy is a waiver of PIP coverage. You can contact me if you see one of these waivers, and I can help navigate you through the process of fixing that waiver in a way that won't come back to bite you, because these insurance companies hold on to these waivers even if you undo the waiver. And I have had situations where somebody has been lazy and has gone through an underwriting file, and they have found an old PIP waiver and said, hey, I have a PIP waiver, send it over to the attorney. We're not affording the benefits, when the insured has changed the policy. So we can help make sure that you are doing so with the proper paperwork so it doesn't come back to bite you. So that's one of the big things. Another thing that I have seen is people buying less uninsured or underinsured motorist coverage than the liability coverage that they have. If you make this mistake, then the question that I asked you earlier, how much money is going to satisfy me if I can get that amount of money for a worst case scenario accident? If your uninsured or underinsured motorist coverage isn't that number as well, because in some scenarios, you can have less uninsured or underinsured motorist coverage, you're doing yourself a disservice. It's relatively inexpensive. But again, to these companies that know that sometimes they're competing down to the dollar, everywhere that we can save somebody $5, even though they're saving a ton, you know, they're losing a ton of coverage to do so. Insurance companies, their systems are designed to do this because they are competing for price, not on quality, at least on the quote side. I gave an example on the website and on Facebook recently about one of these reviews that I did. And here's a good story. Somebody had a fantastic coverage, $500,000 in liability, $500,000 in stacking underinsured motorist coverage, the enhanced UIM. These are all fantastic things. I'm like, this is one of the greatest policies I've seen from a general consumer, somebody who hasn't had me take a look at it before, who hasn't necessarily looked at all of my stuff. And one of the best policies that I've seen, but I still had guidance for them. I said, hey, you may or may not want to do this, but at least explore what it would cost you to take the $2,500 in personal injury protection coverage that you have and bump that up. The max that anybody for personal injury protection can offer you in the state of Maryland is $10,000. Now that $10,000 is per person, per accident. So if you have one of those third row vehicles that seats 7 or 8 and you have it filled with 7 or 8 and you're in an accident and everybody gets injured, that amount of money is per person, per accident. So if it's 10 grand and there's 7 people, it'll pay up to 70 grand, 10 each for wage loss, for medical bills, for otherwise. The cost difference from the 2,500 to the 10 grand was a grand total of $31 a year. That's less than $3 a month. And we went a little further with the math here. I said, let's do the math on how much you'd be paying in premiums to have this increased coverage. Because I like to tell people, hey, if my advice is a waste because you never get another accident, at what point does the insurance company win? So we did the math. We took that $31 a year and said, how many years of paying the extra $31 will it take to get to $7,500? Because that's the extra coverage that just one person would be available. Just one person in one accident. And it's 241 years. Now, this person had already on their own taken my advice, contacted the company, their agent, whoever it was, and said, hey, I want a price on this. That's how I know, because they reported back to me. And I said, you realize you'd have to have this policy and avoid an accident in which you were injured for the next 241 years. An impossibility, of course, because as of right now, most of us don't live past 100. That's how long you'd have to have this policy to pay the insurance company more money than the benefit that they're likely to pay you. Because to be honest, even the small accidents, even the little ones, most of them have $10,000 to $12,000 in medical bills. Hospital, expensive. If you go to the ER in an ambulance, you're pretty much at $5,000 that day. So you're already halfway to the 10 grand. A couple months of physical therapy, again, relatively minor, but you get in the ambulance and you go get checked out. Boom, you're at $4,000 or $5,000, somewhere in that range, depending on the hospital, depending on what diagnostics they do, assuming they don't do an MRI, because if they do an MRI, we're probably in the $6,000 to $7,000 range. So we're just keeping it $5 grand. X-rays, maybe a CT scan to rule out a closed head injury. Few months of physical therapy, and let's say that's it, and you're done, and you're back as if it never happened. Boom, you're over 10 grand. That's just how much this stuff costs these days. So that extra coverage doesn't take a big accident for you to end up needing that kind of coverage. And unlike your health insurance, because this is where it trips up. I have learned, because I've done enough of these intakes and surveys through different insurance companies, that if you're buying online and it asks you, hey, how do you have health insurance? It's going to default to a PIP waiver. PIP and health insurance are not the same. Health insurance doesn't pay for your wages. Health insurance does, in most scenarios, have to be reimbursed if you get a settlement. PIP can pay for wages. PIP does not need to be paid back if you're injured in an accident and you get a third-party settlement. Not in Maryland. Some states it is, but not in Maryland. So that's why these things are very, very different, even though their system with many of these insurance companies is designed to treat them the same. Anyway, I've gone on quite a bit here. Please go to marylandinsuраncebook.com, upload your insurance policy. This is what it's going to look like. You can click where it says claim your free review. We are giving $5 from every submission to the Benjamin Hines Memorial Foundation Scholarship Fund. We also just got word that a brand new to Elkton insurance company called Watchtower Insurance is going to be joining us in matching that award. So now between us and Watchtower Insurance, $10 every time we review one of these is given to the Ben Hines Memorial Foundation, their scholarship fund. You are entered to win an autographed Zay Flowers jersey, 2 lower level tickets to the Ravens home opener next month around this time, mid-May, is when the NFL will announce the whole schedule. So you'll win these tickets before knowing which game it's to. I know that's a little inconvenient, but it's going to happen that way. If you can't make it, we'll work with you. We've got a $50 gift certificate to Greek Girls Ice Cream down in Perryville. Really, really great spot. And also the Armored Combat Elkton Gym here in Elkton, where they do all sorts of different training programs, not just the ones that are geared toward fighters that are fighting in their monthly competitions, but a free month of training there. So next week, we're going to add yet another prize to the pool. So you're going to win a whole lot of stuff. Whoever wins this thing, all you have to do is send me your insurance policy right there at marylandinsuраncebook.com. You are then entered to win. What you do with the information I give you, that's up to you. I'm not going to go check in on you here. If you have other questions, I'm certainly going to answer them. That's all the time I have. We went way, way, way long today compared to what I normally do. Got a question or a topic you want us to cover on the podcast? info@bowerslawmd.com. Make sure you mention to me that you want me to talk about it on the podcast. Otherwise, I may just provide an answer and the guidance that you're looking for. Also, missed an episode, need other guidance, want to do some research on your own insurance policy, go to my website, bowerslawmd.com. Right up at the top where it says podcast, you're going to get access to all of the back episodes. They're also on the YouTube channel and all over the internet. So enjoy, share this with a friend. And for the contest, we only have about 20 some entries. So your odds are very, very good to win the contest. Only one person's going to win the contest, but right now you've got like a 5% chance almost, maybe a little bit less than 5% chance of winning this contest. You know, like when you buy the lottery, it's more than 1 in a million chance to win. This, you got a real chance to win this, and somebody's going to win in just 2 weeks. So next week we got one more episode, then we're into May. In May, we're going to do that drawing. We're going to determine who the winner is, and the contest will be over, but the free insurance reviews will continue. So if you somehow missed that, if you're finding this late and the contest is already over, go get your free insurance review. You're not going to be entered to win the prize, but the advice, you may thank me one day. So that's all I have. Be well, be safe out there, everybody. We'll see you next week.